Good evening. This is the Elliott Wave update for the NASDAQ 100 from Monday, March 21st, 2022. Again, not very much to be adding to our current picture, the analysis that we presented yesterday. The NASDAQ did open higher, did manage to push up, make a new high above what we saw on Friday, reached a level at 14,004, almost 467, and then sold off. But now the pattern that it's left behind after the sell-off, the buyback, and then the drop back down is an ABC. It's only a three-wave. And I'm just going to open this up a little, open up a little bit more than that so that we can see it. And there we have, see the A, a B, and a C, or just a three-wave pattern down. And then we're starting to move back up again. Now, it could be a few things going on. What we could have is, again, that being the high and the completion point for that minor wave 2 that got extended over. And if that's the case, then this would be 1, 2, and then we get another 1, 2. So we have two choices. Either it's an ABC and it's going to be still needing an additional run, and that run would again bring us back up towards 14,644. And I would suggest, because of the size of this, against what we've already done, that there's a stronger possibility that this is 1 of 5, and then so on and so forth. So again, just going back so that I can clean up that count a little bit for everybody. We're in the 3 of 4, and this would again be maybe just 1 of 5, which is really, they're getting too big for this size of the degree, but the market is just intending to push and continue to push. So I am continuing to leave open the potential that we're going to get back above 14,467, back above 14,500, and likely up closer to 14,644. That we have to continue to leave open for right now. Again, there is plenty to be concerned about. In fact, the bond market sold off very strongly today, and that was on the basis that 2 of the Fed governors, including Powell, came out and basically were talking about that we might be raising rates 7 additional times in 2022, and then at least 4, maybe 5 times in 23, 24. So they're really projecting out, and that's not a bad thing, because at least it puts back into my mind that, okay, they're intending to deal with inflation until they really get it under control. And that may take several interest rate hikes. Now, having said that, the market initially did sold off a little bit, but then decided the buyers are still going to win out, and they moved back in. Now, also, we still have a brewing situation, even though everybody thinks that, it's far enough away. But there's a lot of stuff going on geopolitically that could really affect the market. And even if a truce is declared, a ceasefire is declared in the Ukraine, there is still much fallout that really could affect our markets based on what has now taken place with sanctions, with the economies, et cetera, et cetera. So there's still a lot of unknowns. And for the market just to kind of be moving in as strongly as they have been is a little bit maybe ahead of themselves, we'll say. But for right now, we have to continue to leave the possibility that the market will revert, go higher, break above 14,465, and then again break above 14,500. Now we continue to have some resistance. I believe that was around 14,568-ish to 70, 80, around in there. And then we will have likely resistance at 14,600, but then we have the Fibonacci resistance at 14,644. And one more time, we need to, again, to leave both of these zones in play right now. So until we get a very discernible and charted 5 waves down, these remain in play as possible areas of where the market can get to. Now, again, this is being just left as 3 waves right now. What would signal that we are again going to be dropping more strongly is, once again, we break below the 20. Once again, we break below this 50. It got down and it bounced off of that 50 very strongly. In fact, it just kept going. To be honest with you, we bounced, we got a little bit of a red bar right there, and then it just took off into the last hour. Now, so breaking that 50 is going to be a major step in putting support towards the highs being in for now, and that the next leg down and the larger leg down of the correction is beginning. And that would be in the form of a minor third wave down. So once it's showing itself that it's in force, again, what I've been talking about is that it will break below here, it'll keep going. It'll break below 14,000, it'll keep going. It'll break below 13,900 and keep going. It'll break below the 200 at 13,855. So once it breaks this, it should easily start to get through these support zones and get down to that 200. That would be the next place where we could get a major hiccup, because the market tends to, when it starts to break, if it breaks with a clean enough break, not just a little break and then a retake, but a break below and they keep going, that is going to give us the support that we are on our way, at least down to the hourly 200. So again, being if that third wave is in force, this all gets broken. And we break here, and we break many different levels, but one being 12,942. We will break that level in the third wave. And once it is on its way, I will redraw our Fibonacci extensions, which will show us more cleanly what to expect in a third wave coming off. So for tomorrow, I'm going to leave open that we still have potential to get back up above today's high, so above 14,467. And when that occurs, there's not a lot of resistance above here until we start getting back above 14,500. So that is what makes the ease of move happen. We don't have resistance up here. We have to go back too far to find it. And so we're going back into February to find the resistance, and that's why it almost doesn't exist anymore. So we should have at 14,500, some again at 14,067 up to maybe 75, and then 14,500. And then again, we have some at 14,068 to about 78, and then 14,600. So that's our resistance zones. And then again, these come into play up here. On the downside, we need to see it move quickly and break below that hourly 50. That's going to be major. If it fails to do that, then upside stays in place. So again, it needs to break it and keep going. It can't just break it, hang out, swing back above it, et cetera, et cetera. It needs to break it and keep going. That is what I would consider a break. I'm going to leave it there and continue to just say we trade smart, we trade the price action. It isn't always the easiest because, again, when we get into these corrective moves, the market gets very sketchy and the volatility picks up in both directions, and it'll pop higher, slip lower, pop higher, slip lower. And so it doesn't make it the easiest market to trade, but end of the day, it was profitable, a little bit higher commissions today because you had to trade more. But continue to use the moving averages. They remain key. And when the markets are in alignment, and that means that they're all going up or they're all going down, and all of our charts are showing that the moving averages are in alignment. Right now, they're getting back there to go on the upside. But again, when they're all in alignment, basically, then that's going to be the direction. Okay, next update will be on Tuesday, the 22nd.